everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. All right, let's get into it. Today, I'm going to be doing something a little different. We're going to be talking about why the cryptocurrency market right now in September of 2021 is heavily manipulated, but why technical analysis still works. It still works. And this is what we're going to get into. If you like that, if you think that is interesting, then stay tuned, watch until the end. I'm also going to be talking about, obviously, what happened yesterday in the flash crash. This was a flash crash, not necessarily a correction. I'll show you where the correction happened, up until what point we corrected, and at what point we had or experienced a flash crash. And I'm going to be going into what we can expect, most likely based off of what we're seeing in the charts in the immediate short term. All right, so let's get into it. I'm on the 15-minute chart. Those of you who are subscribed to the channel may know that I seldom ever am on low time frame charts. I usually focus on the daily, the 4-hourly, the 8-hourly. If I want to get particular, I'll go into the hourly. Maybe I'll see a pattern in the 30-minute chart, but just temporarily. I'm in the 15-minute chart to make a point. I want you all to look at this candle right here. Yesterday, the title of the video was something to the effect, I don't even remember what the title of the video was, but it was something to the effect of, are we still bullish? Yeah, that was it. Are we still bullish? And I pointed to this candle right here, right? Because we had just experienced a correction, a retracement, if you will. What's a correction? A correction is just what happens when the price gets to a level and people decide, okay, well, maybe we're overvalued. Maybe, we won't necessarily value the asset at this price. And just like I've been saying, we were heading into staunch resistance, right? Staunch resistance right here at around 53,000. You'll see this purple box. It's been drawn in for a couple days now, or a few days. And this is the bottom limit to this resistance band. And where do you get this resistance band? For those of you who aren't subscribed, let's zoom out really quickly onto the daily time frame. It's pretty obvious, right? Between February and May, we had this Wyckoff distribution right here. And this was basically where we hung out for, 2-3 months. And this was where we hit an all-time high. And this is where we experienced that flash crash right here. Well, it wasn't a flash. Well, it was a flash crash, but then what ensued was a distribution. It's a natural distribution, right? The precipitating event was Elon Musk saying that Bitcoin proof of work protocols were not environmentally friendly, so on and so forth. That precipitated the event. But then what ensued was a natural sell-off, right, based off of these distribution patterns. Okay, you spent 2 months doing that, right? So it's only natural that that support that you enjoyed for 2 months at this level of 53,000 now becomes resistance, that you're below it. Okay, this is natural. Everybody knows this. The most novice technical analyst knows this. And this is what everybody, most people were expecting, some sort of rejection at this point, right? But if you're subscribed to the channel, you'll know that I didn't foresee or expect a large 10+% correction until we hit our target of 56 to 58K here. And I'm not going to go into how we got that in this video. If you want to know, we can you can look at previous videos. I go into the Fibonacci analysis, the Elliott wave analysis that I used to get that, and also it's confluent with previous support and resistance. So 56 to 58K is my target, and from that, I believe that we would have gotten a healthy correction of 10%, but not a flash crash. And again, I'm going to go into the difference between a correction and a flash crash. Okay, and let me preface everything I'm saying with this. Some people say, "Oh, we're overextended. We were rising too fast. Too too many green days." And I say to that, bullshit. Look at the price patterns. Look at how we were rising. First and foremost, a little bit of context. We had just come off a massive distribution, right? We had been bearish for months and months and months. And we'd only now just experienced a bit of up growth or a markup, right? We're getting out of this distributive range, this Wyckoff accumulation right here. And we're kind of climbing out of it. And we still haven't really broken through this last point of resistance of this pattern to really, 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 really be in the clear, okay? And all the while, we're climbing up and hugging the 21 EMA and intermittently testing it, back testing it. So it's healthy growth. It's sustainable growth. It's not complete vertical parabolic growth, right? There was steam in the engine. We were fine, right? Experiencing these 5% corrections was normal. And that's pretty much, if you want to measure, if you want to back test, that's pretty much what we had experienced up until now. 5% corrections in Bitcoin here and there, just to keep things honest. Backtesting the 21 EMA. If you want to know the significance of the 21 EMA, I invite you to Google it. But on this channel, I always say, first of all, 21 is a Fibonacci number. It's a special number. If you don't know who Fibonacci was or what Fibonacci is, it's not fettuccine. Fibonacci is an Italian mathematician. These numbers are natural numbers that you see throughout nature, and 21 is one of them. And that exponential moving average happens to be a very solid indicator for uptrends. All right, if you're on that, it shows that you're growing in a healthy way. And when you're too extended from the 21 EMA, you have to come back and backtest it, meaning you have to come back and touch it. And the 21 EMA, by the way, for those of you who aren't subscribed, is the yellow line on this chart. Okay, so that's the context. We're growing in a healthy way. We've been backtesting and correcting a bit, 5% or so. And we get a bit of a correction yesterday. Let's go back to the 15-minute chart. And why I'm in the 15-minute chart, please keep following, is because I want you to see this candle right here. This was the correction, right? And it was, let's see. Sorry. This correction was 5%. It was less than 5%. It was about 5%. And I actually said in the video, yeah, I thought the correction was done pretty much, right? And what happened? We pretty much accumulated on this line. What's accumulation? It's when buyers and sellers say, okay, let's settle down a little bit. We had a bit of a correction. Let's get together. Let's decide if this is a fair price at the moment for this asset. Some buyers are saying yes. Some sellers are saying yes. They reach an agreement, and you accumulate along a line. And that point of control, that line, that price that buyers and sellers agreed upon was 46,892 on this chart. So thereabouts, about 46.9. And that is confluent with previous support that we had gotten from a previous purple box of resistance. Okay. Then shortly thereafter, we get this huge candle. And I want you, and this is a 15-minute chart, mind you. So this happened in 15 minutes. When you get a flash crash in these markets, in these super volatile cryptocurrency markets, it happens under one circumstance. There's fear in the market, extreme fear in the market, something like the March crash of 2020, COVID-19. I don't really remember what it was that precipitated. I think it was something that was in the stock market. But anyway, things crash precipitously in a short period of time because people think that they're not safe, and so they sell off and get into safer assets, either stable coins or completely out of the market. What precipitated yesterday's flash crash? Can anyone tell me? What was the fear? Is an asteroid hitting the planet? No. That's your manipulation. Two reasons why it's manipulation. One, it's a 15-minute candle. And it's one candle. It's not a series of candles. It's one candle. And it's not like we hung out at this bottom of the 43, even anywhere between 43 and 45. No, we didn't. We immediately went back up within 15 minutes to 45.6. What does that tell you? That means the fair price of Bitcoin at that moment in time was about 45.6, considering all of the events, right? So that's why you see a wick. A wick, for those of you who are new to charting, a wick means that there's no time. The sellers sold quickly and actually unilaterally. There was no buying going on. There was no consensus on the price at that point. The sellers just said, some sellers, most likely one seller or coordinated group of sellers, did that. And they sold it all the way to 42.9. And that created a cascade of liquidations. For those of you who don't know, our market has a lot of leveraged buying and selling, okay? Meaning, if I, for instance, I'm going to use myself, and a lot of YouTubers, they like to flout their wins. I'm going to talk about a loss that I incurred yesterday. I lost a few $100s. I was long. I had set a stop loss, but two things happened. One, my stop was pretty low because I hadn't really gone into the zone of the asset that I wanted to set a comfortable stop loss in profit, which you should do, by the way. And two, once I tried to fix my stop loss, because I was actually looking at the chart at the moment, at that moment, I couldn't get into my centralized exchange because it had been overrun. In a flash crash, that typically happens. Too many people crash the servers, crash the systems, so you can't even change your orders. So you just have to wait. Okay, so I want everybody that listens, that watches, that follows this channel, keep that in mind. Always set your limit orders. Always set stop losses, even if it's a few points above your liquidation point. If you're trading, if you don't know what that means, then stay away from leverage trading altogether. Just buy and hold. Those of you who bought and hold, in a few hours, you will be back to where you were from yesterday's crash. Okay. I'm just talking about leverage trading, and there's a reason why you may want to consider leverage trading if you're more advanced. It's a way to feed your buy and hold bags, but that's another thing altogether. I'm not going to make this video too long, but back to the price action in the 15-minute chart. We went back to 45.8. That's where we decided it was a fair price, and we pretty much accumulated there until, okay, we get the completion of all right, now let's do, ABC. Let's complete the correction. Definitely not all the way down to 43,000, but last night we completed the correction basically by taking the price down, dipping down, and now we're dipping back up. That is it. I want everybody to see that. Yes, the market's manipulated, but technical analysis still works. Technical analysis would have showed you that corrections happen in ABC patterns, just like Elliot said. Here's your A, here's your B wave. And if you were here, those that don't know how corrections work in ABC patterns, and let's draw it out really quickly. For those of you who don't know what I'm talking about, why can I never find this? There we go. So here's the A, and you can see this on pretty much any asset. That's how it works. Look at any other asset. even if it's a flat correction means that the B was over here. You can have a running flat, you can have an expanded flat. It's always A, B, C. So those of you who know a little bit of Elliott wave, follow this channel, always see me talking about ABC correction. You knew at this point, if you want to buy, you got to wait for the C. Got to wait for that dip below. That's the real dip. That's when you buy thereabouts. That was in the middle of the night. But still, it's helpful and it pays to know these things. Now, what's going to happen next? All right. Technical analysis isn't a crystal ball, but you do have a lot of information given what the chart is showing. Right now, we're printing an inverse head and shoulders. Okay. And that's a very bullish pattern. All right. And the target for that inverse head and shoulders, as you know, is, let's turn this magnet off, the length of the pattern. So the bottom of the pattern to the neckline, superimposed to the point of breakout. That would take us above the 55 EMA, that green line right there. And that would take us back to 49. Okay. And we would be forming a new head and shoulders pattern. And we would make our way slowly back up to this point of control, which is close to where we got rejected, to 51. We're going to retest the bottom layer or the bottom limit of this purple box. I do expect another rejection, but I expect a regular rejection, kind of like what we got initially in the previous rejection, right? In the previous correction, about a 5% correction, something like that, forming a right shoulder. I would say this is your, here, let's draw it out really quickly. I like to keep these under 20 minutes. Let's see. Where's my head and shoulders? Here it is. This is what I foresee, something like this. This is your left shoulder. This is going to be your head. And this is going to be your right shoulder. Something like this, okay? And that's going to propel us well into this zone, if not through this zone or to the top of this resistance zone. So I do expect another rejection. I do not expect a crazy manipulated sort of cascading longs, a liquidation of cascading longs. But you always have to be prepared for anything. But again, because again, this market is manipulated, and it doesn't take much to manipulate this market. Bank of America did a study in March of this year showing that to move the price of Bitcoin by 1%, it only takes $93 million, which is nothing. The S&P 500 has a market cap of 33 trillion. Bitcoin only has a market cap of 1 trillion, right? It doesn't take much. And, you use 93 million, times that by 5, you get your 5% correction. Times it by 5 again, you get 10% correction. You hit a lot of people's stops, a lot of people's liquidation points. Then you get your cascade. It kind of does it for itself. That's how you get your 20% correction. I hope everybody understands that. I hope this was useful. Please, I want people on this channel to be profitable, to be safe if they trade, if they don't trade, still to be educated. Your education is really your key to wealth in this game. Please, please, please stick with it. You're in the right space. You're early. And if you stick with this, you're going to hit your financial goals. And I wish that for all of you. So like, subscribe, share, and I'll see you guys tomorrow.